Hey everyone, in this video I'm going to compare up-and-coming coffee company Dutch Bros with the legend itself, Starbucks, and answer which one of these two is the better stock to buy. So let's get started looking at revenue growth, and according to this metric, Dutch Bros is growing revenue much faster than Starbucks, 29% in its most recent quarter compared to 14.2% in Starbucks' most recent quarter. However, Dutch Bros revenue growth is decelerating significantly while Starbucks is accelerating. And given two factors, I would not be surprised if Starbucks continues to close this gap. Number one, Starbucks has a significant presence in China, and that economy is just now regaining that reopening momentum. Secondly, Dutch Bros decided or did not receive as much interest from franchisees to open new locations. So the majority of its new locations, it has to be corporate owned, which will limit its expansion. It's really wanting to open a lot more new locations, and that's going to be harder to do if they all need to be corporate owned versus if they could be franchisee owned. The next thing I wanted to compare these two on is operating profit margin for the trailing 12 months. And in this metric, Starbucks has a significant advantage at 14.09% compared to 1.45% for Dutch Bros. Although Dutch Bros has been improving in this metric over the last year after dipping significantly in 2021. Starbucks more consistent since 2021. And again, given the factors I mentioned earlier, I wouldn't be surprised if Starbucks operating profit margin starts to rebound closer to the 18% long run target that management said it thinks the company can get to. Next, I wanted to compare these two on cash flow from operations to sales. And in this metric, Starbucks and Dutch Bros show a alarming, well, I shouldn't say alarming, but a concerning trend with this metric moving downward, with Starbucks moving down from over 20% to 13.9%, and Dutch Bros moving down from 16% down to 8.13%. Although Starbucks still ahead of Dutch Bros, and that's understandable. Dutch Bros is a newer company just really getting on their footing and really opening a lot more locations percentage wise compared to Starbucks, which is only opening roughly 5 to 8% new locations per year, which is significant when you consider that Starbucks has over 30,000 locations. Finally, I wanted to compare these two on valuation, and I chose to use the forward price to earnings. And in this metric, Dutch Bros stock is more than 4 times as expensive as Starbucks at a forward PE of 104 compared to Starbucks at a forward PE of 25. So if I had to pick one of these two stocks to buy today, I would pick Starbucks. I like that Starbucks is more established, its profit margin is better, its cash flow is better. I like that it already has an international presence, and I'm a little bit skeptical in Dutch Bros' ability to expand domestically given the saturation that Starbucks already has in the market. And I'm not a fan of the policy of choosing more corporate locations over franchisee owned locations, especially if you're a newer company. I think that's going to be more capital intensive. It's going to cost a lot more money at a time when money is more expensive than it has been in a very long time. Remember, interest rates have increased over 5% in about a year. So I'm not a fan of that strategy. And so for all those reasons, I would choose Starbucks over Dutch Bros right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.